Welcome back. This is Shirley Davis, and I'm back to another video. I want to welcome back all my subscribers and all my new viewers. This is a channel where we talk about my top stocks, and we also talk about dividend stocks and business that generate passive income. Well, today is the news. We got information from the federal chair, Jerome Powell. He talked about the Federal Reserve will raise interest rates by 0.75%. So that's a lot. So that's going to increase your interest rate on your cars, your homes, any other type of financial products that require interest. Okay, so the federal interest rate has gone up, and that's like a base of 5-6%. And that means for you, the consumer, that means your loans, even prime rate, will be at least 7.5% or more. And if you have bad credit, then it means 9%. But either way, it was decided to slow down inflation, that the Federal Reserve chairman and his people recommend raising interest rates by 0.75%. And it says stock futures are flat after volatile session with Fed's latest rate hike. Okay, so that is the news. A lot of people are upset, but we have to find a way to slow down inflation. Okay, and the other part of that is we had job numbers increase. So last month, job numbers came out, 1.9 million jobs were created. So again, the Fed is trying to slow down the economy, not increase it, okay? All right, so let me take a quick look at the Robinhood. The Robinhood, again, after the Fed's minutes, is down 4.59%. So here it is, the early part of the day. As we got closer and closer to the Fed minutes at 1 o'clock, the stock market struggled, and then it peaked right before he spoke, and then it began to sell off. Okay, so minutes after Jerome Powell's comments, about 1 o'clock Eastern, the market sold off, and here we are with some of the biggest tech names are down over 5% today. We have Amazon down over 4.17%. We also had Google down another 3.78%. So record number of tech stocks are getting body slammed, even the big tech, okay? Even Uber the other day after earnings reported good numbers. They had a nice 3-5% pop after good earnings call. And now after Jerome Powell's comments and their movement on raising interest rates 0.75%, the stock fell another 3%, even after all the good numbers that came in during the previous quarter and good earnings post-pandemic. Uber shares are down 3%. Okay, so let's look for some of the top stocks again for today, because we probably did see a few bright spots, and I'm going to tell you the shorts won today. So if you were an options trader of some sort, you probably made a bunch of money. Okay, now I only have one short index. It's called the SQQQ, and it was up over 10% today. So here we are, the SQQQ, the shorting of the NASDAQ stocks was up over 10% today. Okay, so that again, when the tech stocks crash, their short QQ by pro shares goes up. In this case today, as the market got body slammed in late afternoon, the SQQ went up 10.94%. Also, the UVXY, the Ultra VIX, went up 3.63%, and the short of the S&P 500 also went up 8.21%. So that is the news. Again, these were the top stocks. Again, these are all traded by pro shares. So pro shares today, had you been invested, you would have seen a nice 11.9% total gain on the day. Okay. Now, to be fair, if you shorted the market today, if you shorted Amazon, if you shorted Google, you made a bunch of money today. Okay. So even though it's earnings season, it was a rough day for today after the news that the Fed was going to raise interest rates. Now, the Fed could have only raised 0.5 or 0.75%, and the market would have handled or digested that information better. But unfortunately, the Fed feels like inflation is still too high, employment is too high, and with those two dynamics, they had to raise interest rates. Okay, So the cost of you borrowing money for any type of loan product or servicing loan has gone up, credit cards as well. But the good thing is, this gets us back on track. It helps us to get back to a lower rate inflation market. Now, some people will argue that big business should use their pricing power to keep the prices down, but that is only one mechanism of keeping prices under control. We should not leave it all up to business to do that. Okay, so that's why the federal government is here to help us, rate lower inflation and help us manage the money supply. Okay, so let's go on to the rest of the market. As you can see, it looks like it was all completely red. Let's take a look around. Here we are. We do have some penny stocks that were up today. MGM China was up over 17%. Actua Therapeutics was up 20%. And Chegg, the bookseller, was up 21%. Now, again, these are penny stocks. Chegg used to trade around $70. I thought I took a look at it a few years ago. But again, many of these stocks that were pandemic stocks are down over 70%. So let's take a quick look at Chegg. I just have to guess on this. That this stock last year was trading about $70 or $50. So let's see. Okay, so here it is. A year ago, Chegg was trading at $113, and today is trading at $25. So you got to be very careful about stocks that you pick. You got to pick stocks with long-term viability. Okay, they can't just be knocked out by a big competitor. So Chegg is down over 70% over the last year, from over 90 something dollars, last year trading at $92 and now trading at the price of $19.25 per share. Okay, so that's Chegg. Again, these are just penny stocks. In the big picture of things, they don't really matter. But you can make some money on penny stocks. You just have to be in and out of them. Okay, you can't hold them long term at all. You can trade them too as well, but I just rather trade, or I rather invest actually long term with a 3 to 5 year horizon. Okay, so what else is going on? We know Elon Musk is still working on Twitter. Elon Musk plans to cut Twitter's workforce in half. Okay, the previous week we heard 75%. Today we're hearing 50%, but it's still going to be ugly for Twitter. Some of the best employees are going to be leaving the company pretty soon. Apple now valued at more than Amazon, Alphabet, and Meta combined. Okay, so looks like Apple has the staying power. Apple was once worth $1 trillion, and now combined, it is worth more than Alphabet and Amazon and Facebook together. Now, all that just means it's temporary. It's not forever. We know that Google or Alphabet and I would say Amazon are really worth that much more. They're worth just as much as Apple, but it's just a temporary flux. So what it means is that Apple has staying power right now. Doesn't mean that Apple is worth more. It's just that more investors have decided to flood Apple shares versus put their money in Google and others like Apple and Amazon. Okay, it's going to be opportunity in Amazon to buy and Google. We don't know what the future holds, but I believe Google or Alphabet and Amazon will come back in the future. Facebook, I'm not so sure. Okay, because they're trying that Meta thing. They're spending a lot of money on the metaverse. Walmart fires another shot at Amazon. How the discount wars are heating up, this time with 50% off. Okay, so Walmart trying to give Amazon a run for their money in the e-commerce world. And as we get closer to Christmas, retail is going to heat up. We'll see how well they do in December and January, but right now it's the very beginning of holiday shopping season. Bank of America indicates close to signaling a buy as the Fed looms. Okay, so again, some banking stocks went down as well. Bank of America shares are down 0.3%. Not that bad. Okay, they've got staying power considering banks are down this year at least 20-30%. I know I own Bank of America and it's down from $40 down to $30. I mean, at least 30% down. So I really think that in this market where high interest rates are coming, I believe the banks are a great place to hide some of your money, right? All right, because I own Bank of America, also own Regis Financial, and I own One Main Financial as well. Okay, so I own a lot of banks. Okay, Ford shuttered unit. Argo lays off 78 employees in Austin. Okay, that's some news out on Ford. All right, so let's take a look and finally at the other portfolio. The other portfolio was down as much as 4.34% for a little over $1,400. Again, we talked about this, the SQQ. The SQQ was up today over 10%. This is pro shares. The shorting of the NASDAQ was up over 10%. In second place was Owens and Myers, was up 4.90%. Okay. And third place was Verizon in my portfolio. Verizon was up today 0.91%. And again, another short pro shares S&P 500. The shorting of the S&P 500 was up 8.27%. Also, the Ultra VIX by pro shares was also up 3.73%. So let's take a look. Let's see if there was any other quality. Nope, nothing. Okay, looks like everything else was in the red today. And like I said, the Fed minutes weren't good for anybody, even your industrials, your oil, energy, and gas, and some of your iron and other metals. Okay, so let's see the biggest losers. That's something we could take a look at even better. Deep discounts today. Tesla was down over 5.3%. SOFI over down 10.99%. Apple down over 4.35%. ChargePoint down over 7%. And Okta, the cloud tech company, down over 7.76%. Now, Okta has been one of those companies too that have taken a significant hit. This was one of the big cloud wonders of 2021 and 2020. The stock was trading right around $200, and it's just a fraction of itself. Now, I do believe Okta will come back, but we do not know how long it will take. So you're better off investing in a Google, Amazon, or something like that. But all these techs are getting hit. Even Microsoft down $220 per share. Okay, this is the lowest I've ever seen. Microsoft, not even Microsoft, bringing the pain well below $230 per share, down $220 per share. There just seems no end for Microsoft in the long term. Also, Apple is down slightly from 155 down to 144 over the last week. So Apple, again, has some staying power. Out of all the three major techs, people are betting on Apple, okay? Even though Google and Amazon will still be in it, people are betting on Apple, okay? So as Apple's the I guess the child, the best, but Apple today only took a hit of 4%. So it has the staying power while the rest of the tech is being hit. Okay, so it looks like all tech here was down immediately. We got Microsoft, Okta, Twilio. Ford was only down 2.61%. Let's see what else. Let's just go by losses. That's just easier today. Airbnb was the top loser today in this portfolio, down over 12.94%. They did have a earnings call this week, and I guess they missed the numbers there too. So Airbnb is down 12%. The top loser today, Qualcomm, is down 11%. Another chip maker, and SOFI. SOFI is down 10.99%. And again, they were this company on Tuesday. They had a pop of over 18%, and by day's end, they were up over 9%. Okay, so SOFI did have a lot of good stuff to say on their earnings call, which I do own quite a bit of shares in SOFI. Okay, so own a little over 100 and some odd shares. I still think this is a strong fintech once they do get their student loans revenue back. Okay, so let's go back to the top stocks today. Top stocks today were the shorts. Any stocks that you shorted in the options trading world, or the SQQQ was up over 10%. The short of the S&P 500 was up 8.27%, and the short of the UVXY, the other Ultra VIX stock or portfolio stocks, was up 3.73%. So those are our top stocks today. Again, the portfolio is down over 4.34% after the Fed's news, and also the Robinhood portfolio was down as well due to the Fed's news. So it was really a rough day. And again, this had to do with the Fed, Jerome Powell, and the crew making a decision not to raise by 0.50%, but by 0.75%, almost 0.75%. So I want to thank you for watching. Thank you for listening. Please like, share. And if you'd like to get started in your investment journey, please use my Robinhood link below. And everybody have a great week.